Our first thematic session, Carbon Pathways, Market Instruments Powering India's Energy Efficiency Shift. As market-based instruments like the Carbon Credit Trading Scheme and Article 6.2 cooperation take shape, understanding their role in promoting energy efficiency becomes vital for all stakeholders. This session is co-curated with the Ashoka Center for a People-Centric Energy Transition. To lead this discussion, I welcome our moderator, Dr. Gaurav Bhatiani, Senior Fellow at the Ashoka Center for a People-Centric Energy Transition, and our esteemed speakers to the dais, Mr. Kaushik Deb, Executive Director, Energy Policy Institute at University of Chicago, India, Mr. Rohit Kumar, Secretary General, Carbon Markets Association of India, Ms. Ruchika Dral, Deputy Secretary, Ministry of Environment, Forest and Climate Change, Mr. Saurabh Didi, Director, Bureau of Energy Efficiency, and Ms. Shuchi Malhotra, Lead Advisor, Carbon Markets at Environmental Defense Fund in India. Welcome all. Dr. Bhatiani, the floor is yours.
Good afternoon, ladies and gentlemen. It's my pleasure and privilege this afternoon to welcome a very distinguished set of panelists here on a topic which seems to be the flavor of the day. In fact, the trade seems to be the flavor of the year or the last 2 years. So we are taking this opportunity to discuss how markets, trading can enable investments into energy efficiency and more broadly into mitigation strategies. As trade has been the flavor, one of the things I want to share, a small snippet. In the last, I think, year, 2 years, I've been talking to a lot of people. I've also, go to various universities, and I often hear, this remark that India is setting up a carbon market, and that's a great step forward. And I think, that genuinely is, and that it will enable new investments and a lot of new money or profits to flow in. And I think that's all very valid. But I also hear, some other interesting thoughts. For example, trees have ability, to absorb CO2. And I think that's technically correct. But often the implication is that therefore, very soon, money will grow on trees. So I just want to put a cautionary note as we go into this discussion that, every time you trade, that is, when someone buys something and you sell something, genuinely, both parties often believe that they are astute and they are, making profit. But ultimately, there is a zero-sum game. That is, yes, you are investing with profits, but it's also, making sure that those investments are viable. More seriously, as we move, into thinking about markets, what is the role that we are thinking of India's CCTS as a big picture, setting up, enabling our net zero targets? I think that's something which we need to think about because, yes, we have tried various kinds of instruments, including mandates, taxes, sectoral policies over the last several years, and we have, made some progress. But now the time is ripe where, market-based instruments or carbon pricing can send a stronger signal. And I heard this morning that we are already touching significant, improvements or gains in energy efficiency, but how can you go to version 2.0 where we can sustain these gains over a long period of time. So the way I would propose to run this panel discussion is, I think if we can have a few quick introductory remarks from each of the panelists, about 2-3 minutes before we come to structured questions. So I will invite each of the panelists to make a few remarks. I would request them to keep it brief. Some of the questions to reflect in your remarks in no particular order, but certainly, the fact that, India has tried various kinds of instruments, like I said, taxation, policies, and so on, but now we are moving to markets. What is the ultimate objective, of setting this market? For example, will, sectoral policies continue? Will we continue to have, taxation? And market is one of the instruments, that is to say, let multiple flowers bloom and, we'll see how it pans out. Second, of course, is, thinking about the fact that we have also tried various markets. We have energy market, we have PAT, we have tried REX. So do these markets kind of converge into the future, is something to think about as you, make your remarks. There is also a question of domestic versus international markets, how do we play on that? Then, of course, deeper questions on carbon pricing. So will the prices be entirely left to the market to determine, or will there be floors, there will be caps? And lastly, how do we ensure that this market functions in a way it is designed to, means, it remains compliant, we avoid greenwashing, strong MRV systems. So those are a few thoughts. I thought I'll put it here for conversation to begin, and then we can go deeper into some of the questions. So with that, I think we are set for a very interesting conversation. And let me invite the first speaker. I think I request Saurabh, if you would like to begin.
Thank you. Thank you for inviting us here for this conference. Just as an opening remark, Bureau of Energy Efficiency, along with Ministry of Power and Ministry of Environment, we are developing carbon credit trading scheme, which you might be aware of. And a lot of questions which you actually said that how these market will actually shape up is a very big question. First thing is that whether we should have all the flowers together or separate, or they should bloom separately. My take is that let them grow first. That these things should actually how they are coming up, shaping up. That we need to look into. So, for example, when we are talking about perform, achieve, and trade and the carbon market together, we are saying that both the policies will run together, but not for one sector. So, for example, if we are going to have a targets under CCTS for cement sector, then they will not get targets in the PAT scheme. So similarly, there could be other policies as well. So there is a need of consolidation as well, that whether we are going ahead with the taxation of those things. So for example, when we talk about thermal power plant, which is like an elephant in the room, but they have so many regulations, right from biomass to RCO, renewable purchase obligation or generation obligations, then PAT. So how we can club together if we want to bring them under CCTS. So all those things we need to look at. But if we look at the atmosphere or the conditions and the kind of pollution or the temperature is increasing, then this is the need of that we cannot step back and we cannot move things in slow pace, that we have to move in a very rapid pace now, because now instead of talking on the aspects, we need to implement. We have to actually walk the talk right now rather than just have a discussion on those things. So what our focus as a B is, or as a government of India, is that how to roll out this scheme at a very quick pace so that maximum of the sectors or other things are covered, and then it has to incentivize. Now, when we say 45% of emission intensity we have to reduce, if we will only make policies from the taxation perspective, where only we will collect money and then I don't know how that money will be given to the for the infrastructure or for the actually improvement of efficiency or reduction of emissions. So we have to make schemes in such a way that it should incentivize, and that is the whole purpose of carbon market, that how we can incentivize investments so that the pace, or for example, when we say efficiency improvement is at the rate of 2%, how we can double it. Or if we are saying emission reduction is at certain rate, how we can increase that rate as well. So those things we have to look into, and that was the whole purpose of the program, that how we incentivize at a rapid pace.
Thank you, Saurabh. I think very valid point about, moving forward and enabling investments. Having said that, I think, the experiences from market like electricity, where, liquidity has been a challenge in order for markets to function efficiently. So I would request Kaushik, to step in at this point. You have experience designing markets and being an economist. Some reflections, Kaushik.
Thanks, Gaurav. Thank you also for the opportunity to speak here, be part of this really very distinguished panel, and some of the really complicated technical challenges that this country is facing right now, but also to be able to do it in such an accelerated fashion that we truly take this not just as a challenge, but as an opportunity. So carbon markets or carbon credit trading scheme, not just as another regulatory or a compliance requirement, but actually a instrument that leverages investments into decarbonization. If I can just take off from where Saurabhji kind of left off, as a country, we don't have a dearth of carbon instruments or environmental standards more generally. But a lot of this is limited by capacity and institutional capacity for actual implementation. So at a very significant fundamental level, I think it's very important that while the right policy and policy harmonization of the kind that Saurabhji was talking about is built in, it's also very, very kind of important that that connective tissue in the real operation of the market also comes into place. We've been involved in creating a emissions trading scheme in the city of Surat for particulate matter, and that's been running for the last 5 years. And a lot of the lessons that we've kind of learned from there, I think, are going to be helpful as we move forward in using this very important economic instrument to deal with this really important challenge that the country is facing. And there, the two things that I want to kind of highlight, just to start us off, Gaurav, is interoperability and harmonization. The various instruments that we have to deal with either energy efficiency or decarbonization or environmental compliance in general across, say, power sector or cement and steel, while it's really important to recognize where each of these sectors is in their developmental phase and what's the right instrument to be able to use so that you are not using carbon or environment or energy access as a constraint, but using it as a means to propel growth, you also have to kind of make sure that you are able to create that depth and viability in the market that only comes from a large size and a large number of operators. And that's where this issue of being able to use the same monitoring, reporting, verification requirements, making projects, making capital flows interoperable across sectors, being able to have the same standards that allow for this thing that we have as a project not to be recalibrated for each type of instrument, but to be able to kind of do it just in one single holistic fashion is really important. I'll use the CCTS as an example here. The emissions intensity benchmarks that are go to be part of CCTS could very well be the reference point, not just for any domestic compliance market, but even for things like Article 6 or even a JCM type project. And we need to kind of be able to design that detail, as Gaurav, you were kind of mentioning in your opening remarks, to get that right so that this works. Otherwise, it'll be really hard to have a bunch of segmented instruments and hence a bunch of segmented markets to really provide the depth and liquidity that you need for a well-functioning market.
Thank you, Kaushik. So very important point, what I kind of, take it to the next level is, the need for a market infrastructure to enable and support the market. And I'll draw upon Shuchi next if you can talk a little bit about your perspective, on designing and framing a market so that it can operate efficiently.
Thank you so much. First of all, I'd like to thank AEEE for inviting us here and to be part of this wonderful panel. I think I'll pick up a note from what Saurabh and Kaushik you have mentioned. While, the design part of market is an important element when it comes to test it during its implementation phase, infrastructure, is something which needs to be thought about early on, right? Because you need to understand the infrastructure from a perspective of the registry. You need to also understand the platform. You need to also understand the rule-based order, in terms of when you're setting that infrastructure. And also, since this is a global market, we also will be seeing interlinkages with the international markets. So the infrastructure which we are putting right now, will it be able to merge seamlessly with the global market? Or does it need some additional, elements to be designed, to be thought out, right? So especially in the Paris Agreement, where India as a country has its own targets, we need to be cautious. We need to do the math correct in terms of, while we are setting this infrastructure, while we are designing the elements of the market, also, first of all, it aligns as much as possible with the global standards if we want, foray into that market. Plus, at the same time, we need to consider the practicality of things within our jurisdiction. So that balance is important. So we need to balance that rigor with pragmatism when it comes to designing the infrastructure of the market.
Thank you so much. Ruchika ji, your opening remarks, what are your reflections, coming from the perspective of Government of India, but wearing a slightly different lens relative to Ministry of Power or BEE? And Saurabh, you talked about, elephant in the room power sector. So also your, comments around that, I think will be useful for our audience here.
Sure. Thank you very much, Gaurav ji, and thank you AEEE for having me here in this session. I would want to start with appreciating the way Saurabh ji has put together the need for the carbon market and why do we really have it in place and what is the idea behind it. He has articulated it very beautifully. As far as India's goal for reducing the emission intensity of the GDP is concerned, all of us recognize the fact that all the sectors of the economy are to be part of it if we are able to achieve it. And with that, I'm very happy that it's not just that the compliance market that we have put in place. It is not just the designated consumers that we have put in place. There is also a segment for offset mechanism where everyone in the country is able to participate. And we as the ministry do go around the states and keep meeting different stakeholders. And I would, want to share that everyone in the country is very excited to be part of this carbon market. They have been asking how they can be, benefited out of it, how they can be a party to it and all of that. So this kind of excitement, I think, is very encouraging for the ministry and all the stakeholders who are trying to develop it. And going forward, I think currently we just have about 9 methodologies for the offset sector. We hope to have many more of these. And India has a
a very wonderful and rich experience of working in clean development mechanism. We have already been through all of this. So what we are trying to develop is to bring that what we had at the international level to the domestic level. So I think it will not be a very difficult task for us. All the stakeholders are, I think, very well prepared, and we should be able to put together a robust system which has very seamless linkages with the domestic as well as the international front. And I would say that, I mean, if we are really, committed to achieve the climate goals in the most sustainable manner, then regulation, carbon taxing, and, mandatory targets and all of that is not going to be the sustainable way. The markets is going to be the most sustainable way in order to be able to achieve what we have decided for ourselves as, Viksit Bharat, and also the targets that we have set for the climate action. So especially the sectors where we can demonstrate the business case for the investments in green or low carbon technologies, they should be simply left to the market. I think those will be the most sustainable and most effective ways to be able to achieve the results in the most cost effective manner. And, with taking everyone together and supporting induction of new technologies through the international cooperations, through the joint mechanisms with the other countries, and also fostering the technology development, research, piloting at the domestic level also. So I think carbon market is the best possible way for mitigation, especially for the sectors which can demonstrate a business case for the technologies. I'll stop there for now. Thank you.
As an economist, you can't get better than that. It is the first best option, as we say. Of course, with certain, constraints or, conditions. So in economics, it's always, what are the assumptions or limitations? So we have to be very conscious of that, and we'll talk through the session about it. But before that, Rohit, I want to, you're representing the market association, but also what is the industry perspective? Because, you will be in dialogue with the industry. What is the perspective? What are the good things you are hearing? What are the challenges you are hearing?
Thank you. So first of all, we are coming with the carbon market. That's a great news that finally India is coming with the carbon market. And we are very glad that CCTS is coming. And Article 6, finally, we have done with Japan. So although we are waiting for more Article 6 collaboration in coming days. So as per my information, I think Ruchika ji will tell us better that we are also in process of Korea and Sweden and Singapore in coming days. And Germany is totally interacting with MNRE for various Article 6 collaboration. But I really want to share industry perspective point of view that since we are launching CCTS right now, but India has leverage and leadership in carbon market from long years and years. So we have a lot of learning. Although we have PAT, ECERT learning, that is great, which is helping us to develop our market. But in the CDM era, we have generated approximately some estimates $10 billion from the CDM carbon credit. And that time where India's leadership was total visible to the world. So I think that can be a great learning for us in case we are discussing about Article 6 collaboration and how industry can leverage. Second market is also international voluntary carbon market, which is struggling right now in terms of pricing. But I think that has also immense potential. And we have generated around 25 to 30% revenue from international voluntary carbon market. So that is a global understanding what industry is learning from the carbon market so far. So industry has similar expectation from Indian carbon market like CCTS, and also we are doing Article 6. So that expectations industry is following right now. We also know that the transition which industry has to do. So although we are getting a lot of policy, but action industry has to do in the ground. So we need finance. So how this finance can come? We can have a very good carbon pricing at the end. While some of the report was very alarming, like Indian government has finance taxonomy report is saying that we need $2.5 trillion for NDC. So where the fund will come? So will our carbon market will going to give us a best price for industry to do? And there's no doubt that we need to plan energy efficiency also in the big way, because that is a quick and ultimate solution for energy efficiency. Although we develop projects, it takes 3 years time and 5 years time for forestry development and carbon sequestration. While as a country, we realize that we are more focused on technology part right now, that efficiency and technology integration. Various areas where we can leverage as a country, because we have 75% coastal areas and we have mangrove production capabilities. We also have a large number of forestation projects possibilities are there. So there is a very high chance for industry expectation that when we develop any market, we should definitely do pilot with industry. So let's see the right project modeling, that in case I'm doing a carbon credit development, how much finance I'm going to generate. So that pilot is missing in the ground so far. So while every industry is wish to do for carbon projects, but they wish to have a really confidence, because initial spend industry is doing right now for project development, registry, audit, issuance, and that is extra expense for the industry. While regarding the offset market, while we have a lot of agriculture projects and also biochar projects and all those areas, CCUS projects, where we definitely know there is a high initial spend and investment is required. We definitely need finance to do these kind of projects in the stage one. So that is the overall scenario what we see. But definitely we have a great knowledge, learning as a country. Industry is very geared up for carbon market. And but there need to be some strong case presented to industry that there is a big scope. And also it should be backed by financial institutions. It is not only a statement, it should look in the ground to deliver. Yeah.
Thank you, Rohit. I'll go back to Saurabh ji. I heard very positive, things from you and also, Ruchika ji. I want to draw upon this issue that, we want to have multiple instruments being available, but at the same time, maybe we see market, being the most efficient or the ultimate route. So hopefully at some point, it will become the, channel to go to. But, from a investor standpoint, and, in the previous session, there was a conversation that, energy efficiency should be the first fuel or is the first option. To catalyze, these investments, when we think about investors, they think of, at least 5 to 10 years of horizon. Now, we know that in the market, there is always uncertainty. There is volatility. That is the characteristic of market. And therefore, if alternative instruments, even though if they are less efficient, but they are available and they provide certainty, many investors prefer that. And therefore, the experience, my personal experience having worked in electricity markets is that, PPA remains the choice to go to, even though it is not the most efficient. Most distribution companies are now discovering that they don't have the right PPAs. Yeah, they're too long or they're too short. And therefore, when we are designing a carbon market, how do we learn from markets in India where we already have experience?
So I will answer in 3 aspects. One is that how these actually CCTS evolved. So what are the learnings we actually used? Second is on the aspect of that what I think Kaushik ji also said, that these mechanisms have interlinkages with other, like Article 6. And third is that if still everything fails, then what? So first of all, on the evolution, if we look at compliance market is actually evolved from perform achievement trade. And the offset mechanism is actually evolved from any of the voluntary carbon markets, or you can say CDM. So we had learnings from there. That, for example, Pat, what kind of problems we faced during the implementation, or what are the problems faced by the industry as well. So we looked at all those aspects so that we can resolve those issues. We can plug those gaps. For example, data is one of the key thing in PAT, where we struggled actually. That if you talk about coal consumption, from which point source you are going to take, whether you are going to take coal from the mines, what you procured, or which is coming to your premise, Now, calorific value of coal, which you are burning and what you got is different. How much water is added in that? So these are broad open-ended questions which we faced, and we tried to resolve all those kind of questions in carbon market. So that our MRV is stringent. It is, people can rely on that MRV, those kind of things. And this is an ongoing activity which we will change. So then other kind of experience is that price of e-cert was around 2,100, and even that 2,000 odd rupees was there was no buyer in that market. That how, no, if there is no buyer in the market, even at the base price, then even keeping that base price is not right. So what we thought that, okay, what were the reasons for that why this price is very low? And one of the key reason is that our targets were not very stringent in fact. But that was the starting point. That time we were not having that kind of experience that what is stringent and what is not. And this time we calculated right from that what kind of technology is available for every sector, how much penetration happened, and what is the marginal abatement cost for each technology. And then we calculated what is my total potential for that particular sector, and that too for that particular subcategory of that sector. So that way we calculated, which will give us more confidence that there will be no over supply of credits. Even there should not be over demand of the credits. Otherwise, these prices will go sky high. So that also should not happen. So we looked at all those permutation combinations, and from the experience what we had. Then I can talk for whole day like this on experience, but I'll stop here. But then on the second aspect, that linkages. For example, in case of offset, which is much more important, that if it is having a linkage with Article 6, say for green hydrogen project, if we are not going to sell green hydrogen certificate, the carbon credit certificate generated from green hydrogen, at least at the price of $30, then these investment may not come, because they need significant investment. Otherwise, either green hydrogen cost will be very high, or which cannot compete with gray hydrogen, or the investments will not come. So we have to look into all those aspects, and that's why right from the beginning, this will be a one-stop shop that you can come to the Indian Carbon Market portal, and you can apply for even Article 6.2, or maybe in future we can have a linkage with Article 6.4 as well. So these kind of things also we looked into. Still, I will say that targets are not stringent. People were highly enthusiastic that they implemented everything, and then they achieved whatever we anticipated, more than that. And then there is an oversupply of credits. One way is that we will again make our targets more stringent, but that is not the right thing. So we are coming out with another program which is in pipeline, is market stability mechanism. That market stability mechanism can purchase credits at the minimum price, so that there will be at least sales of the credits. And that should not happen, that there is no buyer in the market. So which will give confidence to the investors. But that is right now what we can foresee is for compliance mechanism, because this is not possible for offset mechanism. So for offset, although it's again in the discussions, that can we have a pledge kind of a thing from the private sector, that we want to have net zero commitments, and when they will say net zero commitments, and then they can buy credits from there, so that it will actually give boost to the market. So these are two kind of mechanism where we are looking at. Then again, Article 6 will also help in that.
Yeah, thank you. I think that's a very important point in a sense, and I'll draw Ruchika ji into this. So when we talk about net zero, and I heard you that efficiency is an important driver for the market, but what role do you see CCTS to play, in catalyzing net zero, let's say over the next 10 years? And then, of course, how does India, Japan, MOC fits into that? If you can talk a little bit about it.
As far as net zero target of the country is concerned, so we are banking a lot on the carbon markets to be able to meet that target, because this net zero has to come from all of us. So as far as Indian carbon market is concerned, it will directly help in meeting the domestic indices of the country. But you also mentioned about the agreement with Japan. So anything that goes is implemented under that agreement with Japan will actually help in meeting Japan's NDCs. So those will be kind of exported. So to be able to, ensure that we do the domestic reduction at the most cost effective manner, and the low hanging fruits are captured to meet the domestic net zero, whereas the more difficult sectors, which are really not, the technology is not established at the moment, and the projects are not viable, are being considered for the mechanism with Japan. So it is not that everything in the domestic market that is there will be available for any other country to take as an emission reduction for their NDC. We want to do ours first in the most cost effective manner, and the difficult ones are to be exported.
That's a very important point, I think, and an important distinction for our audience, that, for our domestic economy, we want to be very competitive and not export our least cost mitigation options. And do you see, Ruchika ji, that, similar MOCs being done with other countries in near future?
Yeah. So definitely, I mean, once we had the approval for going ahead with Japan, the similar structure or the modalities can be implemented with other countries also. And as rightly mentioned by Rohit ji, we are in discussion with Singapore, Sweden, and South Korea. But only the modalities of engagement need to be finalized. And if we are able to agree to continue on the same modality we agreed with Japan, that should be very quick. However, if there is a change or modification that the other country would want to have in there, then probably the approval process might take a little longer. So that is about it. And I think, I happen to handle the international bilateral cooperation of the ministry also. So we keep talking to different countries, and there has been interest from many other. So, but the team in MOEFCC now feels that let's close whatever we have on our plate and then, approach the others going forward. So the other bilateral partners are also equally ambitious to have that kind of agreement with India. And we have identified 13 of those difficult sectors to say that can be included in that. And if we, there's always a possibility to include more sectors which we feel make case or make sense for the domestic action, but we do not have probably the technology or the sufficient financing to be able to do that. So that is also something we can look at going forward.
Great. That's very exciting that, multiple conversations are on, and maybe this year we may have another one or two potentially being signed. I'll, draw Shuchi a little bit, about the voluntary markets. So, we have CCTS, we have signing MOCs, and we have voluntary markets. How do you see, this working particularly from investor standpoint? How should we proceed?
See, from an investor standpoint, two things are important. That the credits you are generating, that is bankable. You need bankable outcomes from the market. Plus, and how do you ensure bankable outcomes? You talk about credibility, integrity, right? So I'll talk about, from a perspective of MRVs. Saurabh also mentioned it. MRV is actually really a linchpin, which connects your technical performance, your energy savings, leading to emission reductions, to an economic valued outcome, which can be your tradable asset, tradable carbon asset. So investors really want to understand that how the market is designed so that they don't have to on a project to project or a facility to facility basis, think about, whether those systems need to be verified and re-verified. MRV is a multi-step process. You have to measure accurately, you have to report transparently, and you have to get verified by a third-party independent body. Now, all these three elements are essential for creating that infrastructure for a credible carbon pricing, which then the investor would be willing to put his money on, right? The other part which is important is the integrity side of things. If you look at the global conversations around integrity, of course, there has been a few controversies as well. But a good thing is, let perfection not be the benchmark. Let's learn from there and build on systems which actually deliver. So when you talk about conversations about integrity, what we are seeing on the global landscape is that these conversations are actually moving from single issue critiques on additionality, critiques on baseline, to a full stack of integrity, which means you will have to look at the quality of the credits, right? You will have to look at the governance of the standards which are underlying this credit. You will have to look at the transparency of the registry. So these elements will play an important role to give the investors the confidence on it. Especially, when we talk of standards like Vera and Gold Standard, they are also undergoing reform. They are raising their bars and they are aligning their methodologies with the ICVCM, the Integrity Council of Voluntary Carbon Markets, because the ICVCM looks after the supply side of integrity. And then there is a VCMI, the body which says what you can claim and what is the communication around that claim. It should not be a greenwashing, right? So from the demand side of things, VCMI is looking at the integrity. Increasingly, what we are seeing is Vera and Gold Standard are opening themselves to scrutiny from ICVCM to say that, these are the methodologies which are good to go ahead. And investors are getting that kind of a confidence from the market. Plus, if you look at the international market scenario, there are credit rating agencies also, right? Like we have financial rating agencies, we have ESG rating agencies. These credit rating agencies are also scrutinizing at the project level to say and give that confidence to the investors that all those claims that the credits are real, measurable, verifiable, they are true or not. So from that perspective, if you have to look at it, these developments also basically give us a roadmap in terms of how do we shape up our domestic market. Because what we understand from these developments that, what is sellable in the market, what is getting the demand in the market. So how do we shape that up becomes very important. So integrity, MRV, they are basically the key foundational pillars for this overall market development infrastructure. Yeah.
Thank you, Shuchi. So, Rohit, at one hand, we have CCTS, we have MOCs being signed, we have voluntary markets. From a industry perspective, the businesses have to prepare for this. At the same time, some of our key exports are also going to face challenge from CBAM. So how is industry preparing, and what are the key challenges you feel they need to overcome in the next few years?
Yeah, so CBAM challenge, I think everybody knows that we are expecting that something will happen in free trade agreement between EU and India. So we are still thinking that what those areas are there where CBAM challenges should be mitigated. But of course, the 6 sectors in CBAM as a big challenge, and which industry is already working on it. So we are very glad to share that industry is already using the energy efficient technologies. They are already doing great job in cement sector. Steel is a challenge and aluminum is a challenge, we understand. But a lot of efforts industry is doing, and we are very glad that they are taking ahead in this direction positively. But at the same time, we realize that how CBAM challenge can meet in terms of carbon market. So that is a big area we need to address. So suppose Indian enterprise who is doing export around the world, and they are definitely looking forward some credit like Article 6 credit, or those credits which can really qualify for CBAM areas. So recently, I would like to give a picture that India has more than 200 million credits right now, as per industry credits we have, in which some credits belongs to the CDM and large credits are in the voluntary carbon market. But the future of these credits are not clear because we are migrating from CDM to Article 6.4. Some of them are migration happening, but the risk credit price has fallen down drastically because Kyoto to Paris we have migrated. While voluntary carbon market, the price has really gone down drastically because of VCMAI and ICBCM lobbied to giving this core carbon principle they have, and they have recognized that renewable energy credits are not qualifying as per the core carbon principle. Our price has fallen down drastically. So we raised this concern various times that who will look after the international voluntary carbon market. So we definitely need some institutions who can look after the international voluntary carbon market, because industry has suffered a lot because of international voluntary carbon market fall down. While not only industry, but a lot of PSU has suffered a lot, like NTPC and NHP, all the PSU who has done the projects in voluntary carbon market, their price has fallen down, I think, more than 70–80%. While CBAM era, we also recognize that some of the CDM credit which is migrating to Article 6.2 or 6.4, those CDM credit can be used for CBAM purpose, like MCU, because we have to take the host country approval. So we have written note to MOFCC also that we have bulk of CDM credit which is migrating, and we can really recognize this credit under Article 6.4 MCU credit, where host country approvals are not required. It can be treated as a voluntary credit, but there is a larger approval required under UNFCCC. This is one area where we can leverage from the Indian industry. Second, the credit, when we talk about Article 6, Article 6.2 talks about unilateral and bilateral. Article 6 never talk about bilateral. So some of the country has done very smart move in the world, like Kenya and Malawi. All this country has recognized their credits under Article 6 by themselves. So okay, they are saying that cook stove credit will come under Article 6. We wish to take it, take it. So those recognitions and activity is smart move we can play, because we have more than 100 million credits lying with us. So in case we are not able to milk money in India, so industry can really take leverage where government can announce that these credits are already there in the voluntary carbon market, and all these credits can be recognized under Article 6 credit. So those credit we can leverage industry to be CBAM area. So we really want to see the global perspective, how the world is moving and how industry can take leverage and what are the assets we have. So we are regularly thinking about the future, but whatever past we have, so all those past credit can be utilized, how it can be utilized, because industry has really taken the great step and great action. That's why those 100 million or 200 million credit had been generated. So industry will also get the recognition, and all those credits can be linked to CBAM credit. That is the exercise. We are very happy to do it with the industry and the policymakers together. And so those activity can really be recognized and industry can leverage. But one more question, the concern I have, that all the technology part which comes under Article 6, which is 13 technology, we are already meeting 2030 NDC. We are very glad that we are meeting this NDC goal. But we should also understand that what will happen to 2040 and 2050. So as a country, Japan has done Article 6 with India. India should also do Article 6 with various African countries, another part of the world, as Switzerland is doing, even Japan is doing, a lot of countries, because they plan for future. They plan for future that 2050, if they wish to net zero, they should have an Article 6 credit from 20 or 30 countries in the world. And as a country, we are also doing multiple operations around the world. So can we also sign up with Article 6 with most of the African countries, Asian countries? They need finance. And our business operations are already there. Our companies are multinational in nature. Either we talk about any company, like even the Bajaj Pulsar, they're in the Mexico. How this company can also get the net zero if they have plant in that country. We should also think about those industry who is multinational in nature, operating outside India. How this company can really be very competitive at the global stage. So I definitely propose that as a country, we should also do Article 6 with many more countries. We should be ready with 2040, 50, 60, and 2070 is a net zero. So that is my
Thank you. Thank you, Rohit. I think very important points, long-term visibility, pricing, and I heard Ruchika ji, so I think more agreements are already on the way, as you rightly said. I don't know which countries, but I'm sure conversations are on with multiple countries. But a quick point, I think, Saurabh ji, before I come back to Kaushik, regarding these old credits, and you pointed out, about our own, PAT and RECs. Is there a way, in CCTS, where some of these can somehow be incorporated? The reason I'm asking this is because, investors, once they burn their hand, are not likely to invest again unless, their previous investments are viable in some way. So what are your thoughts to, make these investments viable?
This is the most difficult, most challenging question. Look, whatever has happened has happened. They have already burnt their hands.
In economics,
So-
we say
so
they are sunk costs, but for
That is like a
investors,
sunk cost to them. But if we will bring that cost to CCTS, the new players may get further additional sunk cost. So that we are not saying that that is a sunk cost right now, because PAT is up and running. That REC, because of the RCO, they can still sell those credits. So there is a market. But if, say, eventually we will close PAT and will transition everything to carbon market, then probably we'll do that. But right now, at this stage, we are saying that let us get footholding of CCTS first, and then we will talk about how we can get that transition. Because that PAT, we are not closing PAT.
No, understood. I think, thank you. The challenge is that at macro level, we are struggling as a country to kickstart the new private investment cycle. And it's not about PAT or any specific scheme. I think overall, it appears that private sector remains reluctant to invest. And I'm talking macro now. I'm not even talking energy. And therefore, these conversations need to come to some kind of closure, even if they have to be sunk costs, because the longer you continue without a resolution, it only increases the costs. So once these costs are recognized, if they need to be written off, they're written off, and we start afresh. Otherwise, you rightly point out, you're going to weigh down the future with the past. But coming to Kaushik, you have done a lot of work in Surat on emissions trading. And I think it will be enlightening for our audience to understand what are the lessons really looking into the carbon market. And in particular, since we have a lot of people who are potentially interested in energy efficiency, if you can specifically point out a few aspects which investors in energy efficiency need to think about. Floor is yours.
Thanks, Gaurav. We've been in this business long enough to kind of, this is a really heartening conversation where you find economics front and center of the design of emission control policies and regulations. It's been a long time coming, but I think the fact that we are having this sophisticated and detailed conversation here today is really a sign of the times. And I hate to be the one who kind of puts a dampener on the enthusiasm here. But let me kind of flag a few things. How sophisticated our analysis is in terms of trying to identify a floor price or a ceiling price, however great and good our estimates of abatement costs and the like are, these are dynamic, these change continuously, and hence you have to be agile and be aware of what's happening in the market on a much, much active basis. So which is where things like the market stability mechanism are like central. So how do you maintain a floor in a market? You can either say that this is the floor and no trades will be allowed below this, or you actually get active just like the RBI does and buys out those permits to achieve a floor or a certain ceiling. And that's where the plumbing of the market is really, really central, is what we've learned from Surat. You have to be very, very conscious and monitor the market on a 24/7 basis and make sure that everything that's happening in the market is above board. MRV, that was kind of so central to the conversation that we was having earlier. It's there is no market without it. In the end, you're creating another commodity market, and whatever it is, you have to have a well-defined commodity. If I today go and buy a dozen bananas and I end up with 11, that's certainly not a buyer I'm going back to. And just like any other commodity, be that LNG or crude oil or wheat, you have to have a very well defined commodity here. And that's where the centrality of MRV and its interoperability across other instruments and markets is super, super critical to having this architecture in place. But also kind of a slight note of caution. Let's not start thinking that carbon markets are going to generate a huge set of investments that will solve our decarbonization issue. Carbon markets, by their very nature, you should kind of think of them as credit enhancement or a hedge against policy and price uncertainty. A way to actually unlock blended finance and debt, which is where the vast majority of investments are going to come from. Carbon price and carbon markets by themselves are not going to be the ones that trigger billions or trillions of dollars of investments. So let's be very, very careful about what the objective of the carbon market is that you asked for, Gaurav. And finally, specifically to energy efficiency and how this would fit into a national carbon market, which is dominated by the big boys, except for power, of course. Bundling and aggregating energy efficiency programs, especially across SMEs, is going to be super, super important. You have to reduce the transaction cost so that you are able to generate projects that are viable to be funded in a carbon market, even if it's kind of just that additional marginal, this additional cost or the additionality cost that kind of comes through the market. And this is where having harmonized, standardized MRV protocols, repeatable templates, default factors is going to be very, very important. And that's where this effort towards the emissions intensity program that's kind of central to the CCTS becomes very important. I mean, this is what will allow capital to scale.
Thank you, Kaushik. I think this point regarding transaction costs is a very important one. It kind of links up, also with what Shuchi said earlier, about market infrastructure, because, investors have to think about that cost. And I'll go back quickly to Saurabh ji, regarding the PAT and, CCTS. You said both the platforms will continue to operate, but is there really some kind of a plan? Say, when do you want to bring the two together? Is it 3 year, 5 year? Because, investors need to have certainty. So what is the plan there?
Look, majority of sectors are now transitioned from PAT to CCTS. So out of 13, 7 have been notified. 1 is in the pipeline, which you will see that notification hopefully before 31st of March. Fertilizer 9th is a critical issue because of the subsidy issue. So we are exploring that. 10th is your thermal power plant, where we had already discussion that so many already regulations are there. And from emission point of view, nothing much energy efficiency they can do. But otherwise, they are purchasing that renewable generation obligation kind of thing. So then remaining are like discom, railway, buildings, which are very minuscule from emissions perspective, because mostly they are using electricity. So I'll say majority of transformation we have already completed, except thermal power. So
is there a plan for thermal power plant?
So we are in the discussions. As such, there is no timeline for that, but we are exploring that how and what we can do, because we don't want to increase cost of electricity.
Of course.
So that there should not be a burden or because of the electricity cost. So, but we are exploring. We may take that decision in years' time, but I can't commit right now on that.
No, makes sense. Of course, we need to be conscious of the cost of electricity. And there is, a consideration of the fiscal or the revenues there because there's significant taxes. There is, which government has to think about. From a market standpoint, of course, there will be a huge advantage to have thermal power because it will bring in demand certainty for the investors. So I'm happy to hear that you're thinking and conversations are going on. And with that note, I think given the time, we would like to open the floor for audience. But Kaushik, quickly before that.
Just a quick point to what Saurabh was saying. So when we launched the market in Surat, there were some very interesting things that came out. Of course, there was a market and hence emissions came down by about 20 to 30%. The compliance increased from about 66% to about 100%. But very importantly, very, very importantly, the cost of compliance came down by 11%. That is what markets do. What markets do is bring in efficiency. So if electricity was in the CCTS, their cost of compliance would actually be lower. And my bet to my last dollar is that the cost of electricity would actually come down.
Thank you, Kaushik. So we'll open the floor for questions. Before I invite the question, please do identify yourself and, keep it to a question and not a very lengthy one at that, given the time. So there is a back before that,
Yeah.
Yes, sir.
Thank you, sir. A.K. Jain, I'm from the urban sector. Someone said that there is a carbon credit of 100 billion, which is lying in India. So is there any action plan to capture and to retrieve this carbon credit?
Thank you. I think, Rohit, you want to take quickly. I think we have already said that is under consideration.
Yeah. It's 200 million credits estimated we have. So it's under consideration. So which Saurabhji also mentioned that after CCTS market launch, we'll see. But definitely we are working on this. We are giving suggestion to ministry that how those credit can be utilized for other purpose like CBAM or Article 6 purpose.
Yes, sir, please.
I'm K.K. Roy Chaudhary, Energy and Environment Consultant. I would like to ask Ruchika ji, India has signed MOU with Japan for this under 6.2. And also some more discussion going on with some other countries. I would like to have some deeper insights, brief insights about under the sectors earmarked, what are the methodologies will be, what are the methodologies being, agreed upon to for accurate estimation of carbon credits in carbon project developments? Will it be hovering around 6.2 methodologies under UNFCCC or methodologies and also those IPCC guidelines, etc., or can be mutually agreed upon by the two countries joining? What are the liberties there?
Right. Sir, I think you answered your question yourself that since it is a joint mechanism, so all the rules and procedures of implementation will be agreed mutually. And this JCM with Japan was signed in August last year, so it has not been very long. We are working on the rules of implementation. A joint committee has already been established with members from MOEFCC, MOP, MNRE, and MOPNG also. And the rules of procedure, rules of implementation, and the mechanism that will be followed. For example, in CDM, we had the project design documents and the validation and verification cycle. So all of those similar things will be followed here also, which we need to agree on. But in addition to that, there is also a PIN framework that we are working on, Project Identification Note Framework, where there can be early submissions to the mechanism, so that the investors or whoever is going to work further on it is able to get a clarity on whether it will qualify as a project under JCM or not. So all these modalities are being discussed and being worked out, and it will be mutually agreed, everything, even the methodologies that we will follow. So it is too early for me to confirm that, but I'm sure eventually that will get confirmed. And once we are able to complete the full circle with one country, I think doing it with the others should be much faster. Thank you.
Hi.
Thank you. If there are more questions, please raise your hand. Yes, sir. Please go ahead.
Yeah. Hi. Hi. Good afternoon, everybody. Thanks for the session. It's a small two-part question. One is that how do you look at new technologies? Example, enhanced rock weathering, which has been backed globally. Marty Carbon got that 50 million grant. So how do you see ERW now biochar scaling up in India? India being primarily agrarian economy, so biochar can be scaled up and is being scaled up now. So how do you see these two technologies adding to the carbon credits, and which is more tangible in nature? The third part is CCUS. So the budget allocated 20,000 crores to CCUS. So how do you see this allocation catalyzing the entire journey of carbon capture across these hard-to-abate sectors, and also for ventures or startups and innovators in the CCUS domain? So these are two key parts.
Do you want to take that?
So as of now, we are working on ERW, biochar, and CCUS. All three aspects, we are developing methodology for Indian carbon market under offset mechanism. As far as 20,000 crore, that there is a mission called CCUS mission, which is working on that. They asked for that kind of budget. Actually, that was demanded much more than that. But then they have a action plan for that implementation. So although I am not part of that CCUS mission technicalities, that what exactly they are doing, but yes, there is a plan for implementation of that.
Rohit, you want to add?
So, yeah, I will add quickly because I'm also working in this space. So in the biochar space and in the international voluntary carbon market, so we have few projects. We have done project modeling, and the ROI for the project is 3 years, only from biochar carbon credit. So these are great projects to implement in the ground. We already have a surplus biomass as a country. Regarding CCUS, we have recently sent a policy suggestions that industry captured carbon can also be integrated with green hydrogen and can e-methanol and e-methanol to SAF or shipping fuel, synthetic fuels. So that is the area where we can really emerge much faster, although country is focusing on biosaf right now. But eSAF can also be a great potential because storage capacity we don't have. So CC utilization capacity we can increase for shipping, aviations, and other sectors. Yeah.
Thank you. There was one question this side, last question on this side, please. Yeah.
Hi, good afternoon to everyone. Thank you, panel. My name is Alec. I'm from IIM Lucknow. And I just wanted to know, ask a question to the panel. What are the scope of the technology stack like blockchain and other for M and R, other for measuring and the reporting? What is the scope maybe from the MOFCC's point, from the BE point, or from the industry's point?
Suchi, you want to take that or?
We are using blockchain for issuance of credits. So our registry is on a blockchain platform. I am not an IT guy, so I cannot say much on that. But yes, we are using blockchain for our registry for issuance of credits and for tracking of credits. But we are working on digital MRV as well, which may use blockchain technology, but it is what I observed, it's extremely costly. We struggled a lot for getting even servers with having that capability, like a lot of other things are also required. So, but we are trying to use that.
There is a feed special. You want to add, Suchi?
Yeah.
Please.
So I think the domestic challenges you have covered, but yeah, in the international arena, a lot of emphasis is being placed on digital MRV, and of course, cost is an important factor. In fact, there's a Carbon Data Open Protocol, CDOP, which is trying to work across linking registries as well as tracking the source of the generation of credit. It basically looks after the provenance of the credit. right? So those kind of developments are happening in the market. Of course, as the market matures, we will try to look into, how we can embed them into our systems. Of course, cost is an important consideration, and also data security, because from an India standpoint, it is important where this data is being hosted and how it is being retrieved and used.
Thank you. Thank you.
Just wanted to add, this time we are going to have Prakriti, although we were supposed to have on 12th and 13th of Feb, but dates are postponed in March. So most likely we will have on 20th March around that period. But our theme is digital MRB for Prakriti.
So please attend that. So the feed organizers do a poll question called Mentimeter, which is a feedback for us as a panel. I think it is something which they have done a poll as we were talking, and the question I will just read out in the meanwhile, it can be flashed on the screen. The question was, which carbon related instrument do you see as the strongest driver for energy efficiency over next 3 to 5 years? So we would love to hear what our audience is telling us, and they feel CCTS is going to be the key driver. So that's amazing. And I think that tells me that, we can end this session, on a very positive and hopeful note that, CCTL will enable a lot of new investments. Kaushik was talking about reducing costs. So that's, all about creativity, innovation, which markets can catalyze, through entrepreneurship. And I think that's a wonderful, expectation as we look over next few years. And it reminds me, of two lines, Nida Fazli के दो लाइनें मैं पढ़ना चाहूँगा. कोशिश भी कर, उम्मीद भी रख, रास्ता भी चुन, फिर इसके बाद थोड़ा मुकद्दर तलाश कर. So on that note, thank you everyone. It's been, I think, an enlightening conversation, and back to the feed.
While we wish we could dive even deeper into this fascinating discussion, but we must stick to our timelines. Thank you for such an interesting discussion on carbon market instruments that can drive India's energy efficiency ahead. I would request our speakers to please come in front of the stage for a group photograph. Thank you. I would also like to thank our session co-curator, ACPET. Ladies and gentlemen, we now break for a networking lunch. We request all of you to please be back in your seats by 2:10 so that we can proceed ahead in a timely